Increasing mortgage rates. We finished the year with them, and now Greg McBride, financial analyst with Bankrate.com, joins us with a look at where they're headed in 2014. Hi, Greg. How high and how soon for the 30-year fixed?
Happy New Year, Chuck. I do think that we'll hit the 5% mark here in the first half of the year. Probably go as high as 5.5% at some point during the second half of the year. But I think it's going to be a slow, steady grind, not a big jump like we saw last year.
What about adjustables?
The starting rates are also moving higher, but we're not yet or anywhere close to that point where we have to worry about resets. Eventually, we'll have to deal with that, not this year.
Do you think that either of these two will be enough to stall home buying?
No, I really don't think so. Again, as long as we have that slow, steady grind. If we got a big jump, that'd be a little bit different story because borrowers get that deer in the headlights look. But as long as the economy's improving, and that's why we're seeing rates move higher, it's that improving economy that's going to get people to buy houses.
What about savers, Greg? They've been very patient during this time. Will they finally see higher rates in 2014?
I wish I had better news on that one. It's going to be another tough year for savers. Savings accounts, money market accounts, short-term CDs, those yields are all going to stay in the basement this year. You could see some improvement in longer maturity CDs in the back half of the year, but it's not going to be enough to make them compelling.
What about car loans? A lot of people have held off buying. They're thinking about it this year. What about those?
Well, the car loan rates, we saw record lows in 2013, and rates are going to stay pretty close to that level this year. So the landscape is going to be very attractive for the many people that have, as you said, kind of put off buying a car, and now's the time they have to.
Got to ask you one more thing if I can. A lot of people have put away credit cards or pared down the ones that they've had. Do you think that the credit card companies are going to try and entice us back?
Well, for card holders that have good credit, there's a lot of competition. You're seeing 0% balance transfer offers for as long as 18 months. But my message to consumers with a credit card balance is this. This could be your last hurrah to pay down that balance in an environment where rates, you have the tailwind of low rates rather than the headwind of rising rates.
So bottom line, what's the advice for people starting out this year, knowing that we've got taxes coming up in a few months and an economy slowly grinding its way up and a Fed that's begun to taper? What do you think?
Well, the bias over the next few years is going to be to the upside on interest rates. So now's the time to pay down things like variable rate debt as much as you can before those rates start to move higher.
Outstanding advice. Greg McBride, thanks for joining us.